Hi guys.
Michael Hewson over there at CMC Markets. I was just keeping an eye on the market here for a second. Michael, help us out here. I mean, come on. You see what the Fed did? You see what Williams is saying now? I know you guys are holding steady over there. What's the view from across the pond?
Well, I've got to say, guys, Powell's tone on Wednesday completely threw me
Yeah.
because at the beginning of the month he was saying that we're not sure policy's restrictive enough, and then he suddenly goes full reverse ferret. I mean, ultimately, I thought I was listening to the president of the European Central Bank, not the chairman of the Federal Reserve, because ultimately Lagarde was hawkish. And you look at this morning's PMIs out of France and Germany, and they are horrible. I mean, we're talking France and Germany being in recession. France Q3 contracted 0.1%. Those PMIs this morning suggest that Q4 is going to be contraction. And yet ultimately, Lagarde would have us believe that they're not going to be cutting rates in the first quarter of next year. Well, I've got a word for that. Baloney. They are going to be cutting rates, probably the end of Q1, beginning of Q2. Federal Reserve, not so much. I think what Williams is saying makes perfect sense if you look at what they did with the dots. We're talking 3 rate cuts potentially next year, not 6. The market's way ahead, way over its skis on this. And ultimately, I think you've got to look at the data. And the data doesn't support the idea of a Fed rate cut in the first quarter of next year. End of discussion.
Excellent mention there, Michael. We were talking about it this morning. Dennis and I were like trying to going back and forth. Did the Fed change from data dependent to now being more in predictive mode? And the reason why we were saying this is that we could think that maybe they saw the recession coming and they're kind of trying to put out the right words to kind of support the market and keep this recession away, because they still mentioned the slowing down of the economy, right?
I think the economy is slowing. I don't think you're going to match the Q3 5.2%. We'll probably get that confirmed next week. Inflation is slowing. Jobless claims 200,000, unemployment 3.9. But I think there's also an element of politics in this pivot.
Yeah.
They don't want to be cutting rates in the last quarter of next year. So what they want to be doing potentially is getting out in front of that and potentially getting their rate cuts done the end of Q2, beginning of Q3, and then ultimately trying to stay above the political fray. I think there's an element of politics to this, because if you recall 4 years ago when Trump was going for re-election, he wasn't shy about trying to politicize the Fed. And I don't think the Democrats will do. I think the Democrats will probably do the same thing. And I think they want to try and steer it as much away from that as they can.
Is this the right move of the flip to go quickly to the other
There's
side?
a difference between, slashing rates and cutting rates. I think rates are restrictive. I think they can come down by about 50 to 75 basis points over the course of the next 12 months quite easily. But do I think they're going back to, where they were pre-pandemic? No, I don't. But I think there's a wider risk here, though, Mitch. And I think it was in the China data earlier this week. China's in deflation.
Yeah.
And the way that European inflation is going, I mean, EU CPI is at 2.4%. The target for the ECB is 2% or below. So we're pretty much there already, which is why I don't understand why they're so reticent about signaling a potential, pivot. The data supports it. They say they're data dependent. Well, hello, Christine. Look at the PMIs. Wake up. Is anybody there?
All right, we just are continuing here with this.
This is just shocking stuff here. I'm just coming in the background here, Michael Hewson. We're going to have a question for you in a second, but Fed Williams is just undoing everything that Powell just said. Premature to be thinking about timing of rate cuts. Talking about they're still basically they saw this rip roaring rally and they're like, screw this. This is not what we wanted to happen. And they're taking it all back. They're saying everything back. I don't even know how you trade this. When you got Powell saying one thing and Williams saying the opposite thing. Rate cut issue, not the main question for the Fed. I mean, this is like, it honestly looks like they put Williams out here to undo this wicked market rally that we just saw. So
Well,
I don't
I think it's what I said earlier, though, guys. I think markets have overinterpreted it. We're in December, so if you're trying to trade this trading up to Christmas, then I think you're best to stay clear. If you haven't made your money by now, don't get involved, because these sorts of market moves are potential widow makers for you. You should have made your money by now. and I think ultimately what he's doing is he's trying to reset the narrative a little bit. The market's got ahead of itself.
Yeah.
He's right to some extent. The US economy doesn't need a rate cut at this point.
I think one thing that was said also, you just mentioned it, Michael, how Powell earlier in the month was saying that we weren't sufficiently restrictive enough, and he's coming in here and also stating that right now. And so that's completely going back to exactly what Powell was talking about a month ago. So that's just a complete flip in the narrative.
Well, it was 2 weeks ago. I mean, it was the first of this month, I think, there or thereabouts, that Powell said that. Yeah. So, this is not helping the credibility of the Federal Reserve. You cannot have, on the one hand, Powell saying one thing on a Wednesday, and Williams turning around and completely reversing it on a Friday. There needs to be a middle ground.
Yeah, I think someone's getting
a call.
Jaw-dropping
to me how contradictory all this stuff is. I'm agreeing with you completely here, Michael. I cannot believe, I couldn't believe what Powell was saying. What that talking about cutting rates, that was what was shocking. I think that's why it was such a violent move up in the IWM, because they're like, oh my gosh, the Fed's going to cut rates even without, the economy falling off a cliff. And now you get the Williams saying the exact opposite. So what's the market to do here? As a trader, I don't even know what to do. We just wait for the next Fed speak, because we just rallied, significantly. Now we're giving not a lot of it back, because I think the market thinks obviously Powell has more weight than Williams, but this is a significant sell-off here. How do we interpret this?
Well, I mean, look at the yield. Look at the 2-year yield. The 2-year yield is still well below the level it was before Powell opened his mouth on Wednesday. I mean, the 2-year yield, I'm looking at my Bloomberg chart, was around about 4.73%. We're still at 4.47. I mean, we dropped nearly 50 basis points on the basis of what Powell said on Wednesday, which to my mind is completely way overdone. So we're just reversing some of that. Let me reiterate, we will probably see rate cuts next year. We just won't see as many as what the market was currently pricing. The market was pricing 5 or 6. Sorry, I just don't see that happening in the absence of a resilient US economy. And I think that's what we're really seeing here. The Feds looked at the market and they thought, what the hell is going on here? We need to somehow reset the narrative a little bit and try and get people back to where we think they should be. And I think that's essentially what Williams is doing.
Is there any need to cut, Michael?
Not at the
that's
moment,
one thing.
No.
So then why bring the conversation? That's what I'm wondering. Because, of course, if the idea here was also to get the Fed balance sheets down, why even bring the conversation before we see that economic weakness?
Again, I mean, that's why I was surprised at the way Powell came out on Wednesday. I expected him to push back a little bit on the market narrative. And the fact that he didn't, and they lowered the dots and put them back to where they were in September, I mean, that sort of makes sense to my mind, because ultimately I think the Fed was looking to be restrictive in September. They raised it to 5.1 by the end of next year. They moved it back to where it was in September. I think that's all they really needed to do. But unfortunately, I think, I don't know what was going on in Powell's head, if I'm honest with you. And certainly I think this is potentially a damage limitation part on the part of Williams. Have we got some more Fed speakers next week? We'll probably see a further reinforcement of the message that we're getting from Williams today.